Money Monday with the University of Michigan Credit Union. Today we're going to explore federal student loans. In late June, the Supreme Court invalidated President Joe Biden's student loan debt forgiveness plan, meaning the long-delayed proposal intended to implement a campaign trail promise will not go into effect. The plan, which would have allowed eligible borrowers to cancel up to $20,000 in debt and would have cost more than $400 billion, has been blocked since the 8th U.S. Circuit Court of Appeals issued a temporary hold in October. About 43 million Americans would have been eligible to participate. So now, where are we at? To help us learn more about what steps we, both students and parents, need to be taking with your student loans, we're joined by Mark Munzenberger, Financial Education Manager at the University of Michigan Credit Union. Mark, this is a big topic right now. Student loans have been in the news a lot over the past 3 months. So what are some of the key issues right now?
Yeah, they sure have been in the news, and I think things are starting to change now, and we're going back to a period maybe we could consider a little bit more of a normal period. But I think we need to pause, take a step back, and think a little bit about what are the key issues that consumers need to know. And the first one, Lucianne, is we have had a pause, and when I mean pause, a payment pause on student loans since April of 2020. So that's over 3 years now.
Wow.
And a pause just means no one with a federal student loan has been required to make a payment. That is coming to an end. Payments will resume. And of course, like you mentioned in the introduction, there was a proposal put forth to potentially eliminate between $10,000 to $20,000 of student loan outstanding debt. And that ended up, not going through. So whatever balance you had back in 2020 is going to be the balance you've got right now. And so we've got to adjust financially. That's what we need to start getting prepared for.
What I'm confused about is with the last 3 years, no payments being made. Are you expected to write a check for that amount, or does it just start up again where you were at?
Yeah, it does. It just restarts, Lucianne. Essentially what's happened over the past 3 years is things have been on a pause. No interest has accumulated. No payments have been reported as late. Essentially, things have been sort of frozen. And so that dollar amount that you've had, it's not higher, it's not lower. It's exactly the same, and we're going to restart things very soon.
So that's the question, though. When will payments resume? What do you know?
Well, that's why we're doing this segment today. We're in August of 2023, and it's important for folks to know that October of 2023 will be the first month in which payments are going to be due again. So borrowers need to start adjusting and making plans to make that happen.
All right. So you should be getting a letter from the federal government in October of 2023, right?
Yeah, and probably even a little bit sooner. You'll get 2 notifications, Lucianne. First from the Department of Education, as well as your student loan servicer. That's the company that you actually make the payments to. So you'll be getting a couple notifications 4 to 6 weeks in advance to help you start preparing for this.
What are the repayment options a borrower has?
Yep. So it's been a while since we had to deal with this. So, we want to kind of go back and make sure we all understand there's the big 3. A standard repayment plan is typically a 10-year repayment plan. That's what's considered normal, standard. Whatever you owe divided by 120, that's your payment. Most students have to elect either an income-based plan, which means payments are less based on what you're earning on a monthly or annual basis, or you can choose to extend the term for up to 20 to 25 years. A standard plan is 10 years. If that payment is a little too high for the budget, you can stretch it out a little bit, lower the payment so it's more doable.
So you have this either income-based or extended term.
Yeah, and so again, depending on your situation and what you think is the best fit for you. There are folks that have an income-based plan that have student loan payments between $25 and $50 a month. And that's typically affordable. But again, it's all depending on, what is best for your financial situation. And you can change this at any time.
Mark Munzenberger with us from University of Michigan Credit Union. By the way, he gives free financial education seminars to the community. You don't have to be a member of UMCU in order to take advantage of those. And we urge you to go online to umcu.org and get more information about those financial education seminars. They are invaluable. Again, that's umcu.org. Mark, what happens if someone can't make their student loan payment?
Well, and Lucianne, there was quite a bit of emotion and some controversy with this, the recent Supreme Court decision. And, people had strong feelings on both sides. But what the administration did in cooperation with the Department of Education is say, listen, we understand that some borrowers out there are really going to be hard pressed to resume their payments. So what they've done is for the first 12 months, starting in October of 23, is they're really going to have what they're calling sort of a really easy sort of onboarding or ramp up. What that really means, Lucianne, is if you are not able to make your payment or your full payment, number one, you won't be reported as late to the credit bureaus, which is a really good thing.
Mm-hmm.
Number two, that will not result in your loan being sent to collections or anything like that. So it gives you some breathing room. No one's being encouraged not to make their payments if they can. But what it's doing is it's giving people a time to kind of readjust their budget and start to make these payments without sort of being a heavy-handed penalties up front. So there's a grace period here to help people.
Well, I think that's good because once you get into those penalties, it's a never-ending cycle. It's hard to get out of it, and you're already trying to make this payment back. On the other hand,
Yep.
You don't want to see anyone abuse that system. If they're not getting reported and there's going to be no implication for not paying those back, some people may take advantage of that.
Yeah, and Lucianne, I hope we can sort of all move forward with this. And you and I have talked about this plenty of times. If you do borrow the money, what you need to do is make an effort to repay it.
Mhm.
And if we kind of go forward in that spirit, I think we're going to be okay here. We don't want this to end up hurting consumers, hurting borrowers, hurting the credit score. So I think this is a good compromise to try to transition back into payments.
All right. There is a new repayment plan, as you mentioned, based on income and other circumstances. You want to elaborate a little bit more on that?
Yeah, they really came out and they've modified your income-based plan to make it a little bit more generous. So what you're going to see, Lucianne, is people with a little bit on the lower to middle income side of things, they're going to qualify for an even lower payment. More people are going to qualify, fall into that bucket. It's a program you're probably going to hear this. It's called the SAVE plan, and everyone's going to get the option to consider that. So there's going to be folks with zero payments for 6 to 12 months as they sort of ramp up to a higher salary. And nice thing is interest won't accrue while that low payment is in place.
So they thought about ways, this had been on pause for so long now, and there was hope by these loan holders that they wouldn't have to pay it back, and now they do.
Yeah.
And so they're easing them into it. It sounds like that plan SAVE, it stands for the Saving on a Valuable Education Plan. And that replaces another one that had been out there before. So that's interesting. And you say everyone's going to be able to decide on that?
Lucianne, it's an income-based plan.
Okay.
So for those that, have a certain income, if you fall above that income level, you won't be eligible. But if you fall below that income level, and that's actually been lowered a little bit, you would otherwise qualify for this. So It's all based on monthly income.
Now, there still is a loan forgiveness program, but it's only for certain professions, right?
It is, and that sort of raises the eyebrows a little bit. It typically falls under professions such as like government professions like teachers, police officers, firefighters, and those type of working in a nonprofit. And that program still exists. Now, there are some qualifications. You've got to make 10 years of payments before you'd qualify. So that hasn't gone away, but it's something that you've got to actively pursue.
All right. So finally, Mark, what do borrowers need to do this month regarding their student loans?
Yeah, Lucianne, we're still 6 to 8 weeks away, but right now is the time to look at your budget, okay? Because potentially you're going to have another expense that you've got to account for. Let's feel empowered to reach out to our loan servicer. Should we need to explore a plan, we need to know who that is, reach out. I'm going to suggest we take a look at maybe all of our debt situation, make sure, whether that's credit cards, auto loans, and make sure we're managing that. And then, the federal government does have a good website, studentaid.gov. That's got all the options, all the information you need, as well as us at UMCU. We're always happy. Nicole and I do workshops on student loans, so we're happy to help you understand your options.
You and Nicole are great. Mark Munzenberger, he's just a wealth of information and really helping out people with their finances. Go to umcu.org for more information. That's umcu.org. Our thanks to Mark Munzenberger from University of Michigan Credit Union, where he is the Financial Education Manager. I'm Lucianne Leanne Lance. This is Ann Arbor's Talk Station, 1290 WLBY.